ladies and gentlemen, thank you all for joining me today. I'm really excited to show you a video. Obviously, I'm going to show you my portfolio. I have my computer behind me. This is obviously all different from what you're used to seeing. We actually were moving over the last couple of weeks, and work has been kind of crazy, and it just started school again. So just a lot of things are moving all at once, so that's why I haven't been able to get a video for you. But today I'm going to be doing a portfolio update. If you haven't seen this before, I try to just go through my portfolio, show you where I'm at, show you what I'm thinking, and then talk about a couple of the positions that I have in the portfolio. I plan to do this monthly. If you're interested in that and you want to see more of that, make sure to subscribe down below. I'll make a playlist if there's not already one. So just look in the card or look in the description and you'll see what you're looking for. But with that being said, we're going to dive right into my portfolio. Obviously, the last couple of months have been kind of crazy, so don't be surprised if you see some huge down moves, especially in some of my companies I'm going to talk about today. But I'm really excited to share with you what I got. Let's hop right into it. Okay, so now obviously this isn't like the most optimal positioning of the camera. Obviously I have to add some stuff back there, but I figured I'm gonna put myself on a tiny little screen. I don't have like a nice webcam yet or any sort of setup right here, so you're just gonna have to deal with what I got. So let's dive right into this portfolio update and let's take a look. So the first things first, obviously it's gonna be through October 31st, 2022. Happy Halloween if this video is gonna get posted on November 1st, November 2nd. So happy Halloween if I missed you, but let's dive right into it. So here's September's portfolio. The way to read this, you have the total portfolio return. That's just, the total deposit that I have made, and then what, negative, either realized or unrealized gains, depending on if I actually decided to sell a company. Left side, got the portfolio balances. The net deposit is like my actual cash deposits, along with the account value, and then you got the positions in the cash, unrealized gains, realized gains, and then the CAGR since the first trade. Now, the CAGR is probably not too accurate, but all the other stuff should be fairly accurate through the date that you're looking at it. But really the important thing you can see here, look, that total portfolio return was $2,300 in the red. So I was down $2,300 going into October 31st. We're now down $3,600. Obviously, we have gone the wrong way. And obviously a big chunk of that has been due to Meta, and I'm going to talk about my Meta position and what I think about it and what I'm looking at. But really, the net deposits, so I added $500 to this portfolio, and the account value is going to go up a little bit, same with the cash. The positions are obviously down. You can see here on the right, this is a pie chart of all my positions along with the cash. Obviously, cash makes up about 48% of my portfolio. Not really that surprising. I sold some puts, so some of my cash is actually being allocated to those puts on the off chance I actually get assigned those shares, which I would love to be assigned those shares, but there's nothing I can do right now, so I just have to wait. But really the big story in all this is what's really driving this down is going to be Meta. So obviously I'm going to show you guys what my portfolio looks like on Fidelity. That's the company I use for my brokerage. Now the first things first, if you want to look at my portfolio, I got a bunch of different shares in a bunch of different companies. Corsair, WBD, Activision, JP Morgan, Dropbox, Berkshire Hathaway, Daily Journal Corporation, Intel, Meta, and then obviously sold some puts on Revolve. So if you want to see the total gains and loss, you can look here on the column, see where I'm at. Obviously, again, Meta is going to be the biggest loss I have on my books, so not really that surprising. You can see my cost base is $4,600. It's at $1,800 now. But it's not obviously a good look and not something that I want to look at, but I'm going to talk about Meta here in a second. You can see just sort of my daily activity and my yearly activity. So this is year-to-date activity. Obviously, we have realized a negative $2,000, and then along with that, we've sold about $600 in options and gotten $100 in dividends so far. So, not terrible. I really am trying to add to the dividends and add to the options where I can. A big piece of it is really having the cash to do so, especially for the options. When you sell puts, you need a lot of cash just to sell the put because you have to be able to assign 100 shares of whatever company you're looking at. So there is that. These are just some of my transactions since the last portfolio update. So obviously I bought some Daily Journal, got some dividends, got some interest from that general market account that they kind of keep your cash in. I put $500 in, bought some more Warner Brothers Discovery. Now you can see here, I bought Warner Brothers on margin, bought it on cash, and then sold the margin. I have margin on my account while I have it unlocked. I don't typically use it, I just have it there just in case, but for some reason, every time you go buy something on Fidelity, it automatically goes to margin, and when I was buying, I just didn't see it. So I just closed the position and just reopened it with cash. I could have called, but too lazy. So Activision Blizzard was one of the new ones that I added. I'm going to talk about that here, and then obviously ended with JP Morgan giving us a dividend today. So the first things first, and Meta Platforms has been one of those companies that has been so dividing on the value investor sites, on the value investor subs that I've been on every single value investor Discord that I'm in, and it's one of the most interesting companies to me because of that. I do think that I overpaid, at least for, I would say like half the shares that I have. What am I at? So I have about 20 shares. I think probably 10 of those I definitely overpaid. Because I was kind of buying when it was going up into the upper 200s. If I would have probably kept with my process at the beginning, or if I would have built it out faster, I probably wouldn't have bought that high. But obviously now looking at it, I had a huge chunk of my portfolio put into it on a cost basis. It's down a lot, so now it's only 10% of my portfolio rather than 16, 17, or 18% of my portfolio. So I am looking at it and trying to debate if I want to add or not, or just hold it. But right now my current plan is to hold. So obviously, again, $1,800 in this company, and it has gone down significantly, obviously. So really the story behind this is the slowing revenue growth. The free cash flow is declining because they're investing a lot of money into CapEx. The Apple and Google privacy changes that they're going to have on their phones, Android and iOS, those are pretty big. Obviously, those iOS changes happened last year, and that was pretty big. And we kind of just lapsed that here with the Q3 numbers. And then we obviously have near-term headwinds in advertising in general. So a lot of people are pulling advertising dollars because, generally speaking, when marketing and spending is really good, the marketing budgets get pushed higher and higher. When things start to get a little scary, recession fears start coming in, advertising budgets get cut. So that's what we're seeing here, and it's not only Meta Platforms that's seeing it. You're seeing it at Google, you're seeing it at Snapchat, you're seeing it at Pinterest, a bunch of other platforms that we're seeing this at. Ads are getting cut. Now, if you look at something like Amazon just started kind of building up their ads, so obviously that's going to be growing. But when you have a company like Meta or Google that's using ads, they're kind of at like the top end of the advertising market share. So any sort of macro changes, it's going to affect them the most. So you're going to see that over the near term. I'm guessing it's the advertising sort of slowdown. It's probably going to take a year or so to really come back. I think maybe a year or two, and it really all depends on the macro. So if the macro goes down even further and we start seeing some really bad crashes, that could be a different story. But for now, the way that everything's going and the interest rates and all that, I don't see it going too, the headwinds coming too far. You have to think we just came off of 2021 and 2020. We got a lot of stimulus. So there's also that into it. Now, Facebook does have a good balance sheet. Obviously, it's Facebook, or Meta Platforms rather. But the thing is that they added $10 billion worth of a bond on there because they needed the cash, and they issued the bond within the last quarter to get that. So it does introduce debt that wasn't there before. It does sort of change the structural approach of how they believe in their capital structure, along with, when you look at Meta Platforms or Meta, like the Metaverse, Reality Labs is really a structural change to how you view Meta Platforms as a company, because it's no longer just FOA, it's Reality Labs now in there, and it's a big spend. And they're expecting the expenses on this to keep going up. They actually upped their expense budget for next year, and they've kind of already announced that and pre-announced that. And so it's going to be an interesting ride. Again, I'm holding this company. To me, though, if I was looking at this for the first time, the important thing that you need to understand is whether or not you're okay with the risks associated with the structural change. Because a lot of people, they want to say be greedy when others are fearful and fearful when others are greedy, but the fundamentals did change when they introduced debt and when they changed over to Reality Labs, and now they're really diving headfirst into that. Granted, there's a lot of money and a lot of free cash flow and things in FOA, but you have to think about the spend that they're doing on the metaverse, because at the end of the day, it's going to impact their bottom line and their top line, and it could hurt FOA if they put too much into it. So there is that, along with the fact that Mark Zuckerberg is headstrong on this. Granted, he's realistic about there's other opportunities within that, and he kind of sees the metaverse being played out, but you have to be okay with these changes in order to invest into a company like Meta Platforms, because this isn't just a great free cash flow generative business that's going to keep growing forever and never go down, and management's never going to, nothing bad's going to happen. That's not the story here. The structure did change in the business. The capital structure also changed in the business. The fundamentals are sort of shifting, so you have to be okay and understand where that fits sort of your risk and reward portfolio and what you actually need in your portfolio from a risk and reward standpoint. For me personally, I really like the company. I'm just holding my shares. I'm obviously watching the fundamentals to see if we see any significant changes. My plan for this one is probably to hold for at least the next 3 to 5 years. Granted, if there's no significant fundamental changes or if there's no like crazy management change that causes any issues for me. Now, the next one that I want to talk about is Intel. This is another one of those, declining revenue companies that I guess every single value investor YouTuber just loves to buy. So Intel is something that I have held for quite some time. I'm not too down on it right now. The position itself is about $1,200. It's a turnaround play in my eyes. I believe that IFS is really a big, change to the company. And again, this is one of those, the fundamentals are changing. The analysts and the people on Wall Street don't know how to value this because it all depends on how well they execute on this plan. And that's kind of where these opportunities come up, is if analysts can't make a forecast of the next 5 years, 10 years of this company, you're going to see them say, I don't want it, or I'm going to wait till we see some sort of, changes or some sort of update in status of the company rather than trying to invest into it now. For me personally, I think that Pat Gelsinger is a good CEO. He did a lot of good stuff at VMware. He seems to know what he wants to do with Intel. It all just comes down to, can they actually execute? Can they get the engineers? Can they get the talent? Can they actually get the management to make this happen? I think that they can, but I don't think that this is going to be something that's going to play out in the next couple of years. I think it's going to take a lot longer, 5 to 10 years, to really roll out and make huge changes to that. I think that the foundry strategy is a good push because I think Intel's starting to realize that they can't just make their own chips. They need to use that expertise really to make other people's chips. And I think a big thing about this too was they're going to learn a lot about technology and push technology forward even more, especially being backed by the government on a lot of things with subsidies. So in the meantime though, while you're watching this turnaround play and you're catching up on all the different earnings reports that they have, it's important that you look at the margins, watch how the margins move. Obviously, it's going to move lower because they're spending a lot on CapEx, they're spending a lot on expenses to get people. So the expenses are going to raise. The R&D and their R&D expense really is going to raise too, because between the salaries and just the technology needed, it's going to be a lot higher. The other thing is that the low earnings over the next few years, I wouldn't be shocked to see if we see either declining earnings or if we just see really stagnant low earnings for at least the next year or two, maybe even 3. They expect this turnaround play to sort of happen in 25, 26. So that's kind of where we have to wait a couple of years at least to see any sort of movement. The thing is though, is that they do have a 5% yielding dividend. Granted, it is a lot of their free cash flow, or lack of they really don't have that much free cash flow right now because of the spend, but they are going to keep paying that dividend. But it's going to be interesting to see if any sort of downturn happens or continues to happen, if they don't just cut that dividend in half or in a quarter. Or they said that they plan to maintain the dividend, but I don't know if that is the smartest thing from a capital structure and from a financial point of view. But we'll have to see what the management does. But you can expect that if the dividend either gets cut in half or if it gets cut entirely or gets held off, that's going to drive the stock down even further. And that is a big risk. And in terms of the risk to reward for your portfolio, it really comes down to, do you understand the play? Do you understand, Intel as a company? Do you think that Pat Gelsinger and the management team can get it done? And then what do the numbers tell you? What do the results tell you? This is going to be a buy and hold for me. I'm really just interested in this one. I do want to look further into Intel and see if I want to add to my position, but we'll have to see, and I'll let you know if I end up adding to it. The last one, this is a new position for me, and this is something that I made a video about not too long ago. I think it's within 2022, but I made it towards the beginning of the year. It's Activision Blizzard. Now, Activision Blizzard is a huge buyout opportunity for Microsoft. They're planning on it. They already have it. It's $95 is the share price that they want to go for. And the thing is today is you can pick it up for $72. So that's like a 30% return just for holding it and waiting for Microsoft to close the deal. Granted, there is some risks along the way. So, it's possible that Microsoft gets completely, banned from getting this or acquisition and actually making this happen. So that is a possibility. The other thing is that, Activision Blizzard is a good buy on its own, in my opinion. And that's what I like the most. I was actually looking at Activision Blizzard right before the announcement, and I was gonna put some money into shares, and then it got announced, and I was like, well, never mind. But here I am picking up some shares at about the $72 mark, about $500. It's about 2.83% of my portfolio. Again, I think that there's good opportunity here if you understand the risk to reward. For me personally, what I really like about it is I'm confident that Microsoft will close it. It's supposed to close within 2023, so I'm confident that they'll close it, and I'm not really worried about the management. It's more so, what is the FTC, what is the government regulators, what are they going to think about this closing? Sony really doesn't want them to close this, obviously. So they're going to push hard to not let it get closed and not have the acquisition go through. But we'll have to see as this goes through the courts, what actually comes of this. Now, other than that, what's next? I'm looking into a couple of companies. I may make a couple of videos for them to kind of explore them more with you and get some ideas from you. But if you have any companies that you want me to look into, let me know down in the comments below. I'm always open to something. Again, I'm a value investor at the heart, so please don't throw me any sort of like Palantirs or Teslas. I'm probably just going to say no. Tesla's an interesting one. Maybe we'll do a video about it, but I don't like the meme stocks and things like that. But with that being said, thank you all for joining me today. I was really excited to show you my portfolio. I'm hoping that we can kind of get this like background or something. We could change it a little bit and make it a little bit nicer. So that way, when you're watching my videos, it's not that foreign and we can actually get to look at some stuff together. But with that being said, thank you all for joining me today. Have a great day and happy investing.